Netflix just reported earnings and they absolutely crushed. Stock price is down, however, which I find strange, but let's see. Earnings per share came in at $5.28, beating expectations of $4.54. That is a huge beat. On the revenue side, $9.4 billion in revenue. Our expectation was $9.3 billion. So the reason it's looking like the stock price is down right now post-market is because they are not expected to reach their revenue forecast for the next quarter. They are expecting $9.49 billion. Expectations are 9.51. So the guidance is off by a couple $1,000,000, and here we are. Netflix added 9.33 million users above expectations. What do you think those expectations were? 4.8 million. Nearly double. And the stock price is down right now, which is just absolutely blowing my mind. It was down 3.5%. It's now down a shade under 3%. Let's go through the letter to the shareholders that they put out. Because I was going through this before I started recording, just high level, and I was like, wow. So compared to Q1 of 2023, revenue was up 15%. Operating income grew 54%. Operating margin rose by 7 percentage points to 28%. Full year 2024, we forecast revenue growth of 13 to 15%. Guys, this is a $271 billion market cap. Wow. And that is incredible growth. Absolutely incredible. We're raising our full year operating margin for 2024 to 25%. Now let's continue on over here to a couple of highlighted things. So if we just pull up the numbers of what they did in revenue, here it is, $9.37 billion. The forecast for the next quarter is $9.49 billion. And you can see what they did in the first quarter of 2023 as a comparison. That's 14.8% year over year growth. When you come down here to paid memberships, this is of course an important thing when it comes to Netflix, really any subscription service. 269.6 million, up 16%, where they were a year ago, same quarter, 232.5 million. And if you guys don't remember, I know I remember this, the concern for Netflix was, are they going to be able to continue to get growth from their subscription? And now something else interesting that they did, they went through, and I wanted to find that here. Let's see, it wasn't forecast, paid members reporting. So if you guys remember this, they were really cracking down on the password sharing, and me having a Netflix account and giving it to Paul or giving it to somebody else, and everybody's sharing the same account. And so they really cracked down on that, and they came out with an ad-based plan. So you can pay for Netflix, and I think you get 4 minutes of ads every 60 minutes. They may have changed it since I read the very first almost beta that they were doing. So let's go through here and see. So when we look at that ad side here, as we noted in the last letter, 2 priorities in ads is to scale our member base and build out our capabilities for advertisers, of course. We made progress on both fronts. Our ad membership grew 65% quarter on quarter, after rising nearly 70% sequentially in each quarter, 2023, the third quarter to the fourth quarter, with over 40% of all signups in our ad market coming from that ads plan. So this ads plan seems to be working very well. I personally don't have any experience with it. I actually kind of might just sign up for it because I'm kind of curious to see. I'm sure it's very similar to what Hulu and what everybody else does, but it is significant growth that we're seeing. And what I wanted to see is this significant growth, 65% after rising 70%. What I don't want to see is a company that it rises 70% and then it drops to 15% or 20%. No, this is really holding. It shows that people are still coming on board. It is awesome that they're doing it. And frankly, it's a long time coming. They should have cracked down on passwords long ago. Netflix is also evolving. So they are obviously generating other revenue streams. And I don't know if any of you guys have tried this or not. I certainly have. The games. There are games on Netflix now. So you can go in there and you can download, I downloaded Grand Theft Auto San Andreas, and you are able to just download it to your iPad or your phone and play it offline. It's awesome. I usually do it on a plane, which is probably weird for the person behind me, but that's what I do. And games are really cool on there. And if you look at some of their best series that came out, Griselda, 66.4 million views. I have no idea what that is. Three Body Problem, don't know what that is. Avatar, but obviously the majority of people do. Love is Blind, yes, that was good. 20 million views. The girl that said that she looks like Megan Fox doesn't look like Megan Fox. Dave Chappelle, I watched that. I was rather underwhelmed. Let's see what else we have. I did not watch any of this other stuff. Not much of a TV watcher anymore when it comes to series, but clearly other people are. Almost 270 million households across 190 countries now subscribe to Netflix. It's awesome. So really good things going on. Let's see what the stock price is doing. It's down 2.6% still. So something that I often say, don't get caught up too much in the quarterly earnings. It's just not worth it, guys. We went through every single thing. There was not one single thing that I have said so far that was a negative. And look where the market is putting the stock. Now, it's not very much. It's 2.3%, and which is crazy to think. When you would say 2.3% of the past, that was a big number, but it's 2.3%. It's nothing outlandish. But the point is, you would think if I saw a beat that much, I would say this thing's up 5%. This thing's up 6%. They are on they're marching right down the street. So I don't think that there's a lot to cover here on Netflix that we don't already know. Let's go back in my history and see the last time that I did Netflix. I know it has been some time. Yes, it was October of 2023. And let's check out the numbers that I threw in here. So their revenue growth over the last year, 6.7%, over the last 5 years, 13.7%. And if you look at the quarter over quarter, it's a lot higher than this, so it's growing. I did 6, 10, and 14% revenue growth. Now, I'm going to go a little bit. I'm going to go 5, and I'm going to go 9, and I'll go 13. I'm just going to bring it down just a touch, just to be a little bit more conservative and see where these numbers put me. Profit margin of 10, 12.5, and 15. Their profit margin has been increasing, hence why I elevated a little bit. Let's see if they could stay there, especially with this ads, with the ads section that they've come out with. I think that they could probably increase margins a little bit there. It might take time, but they can do it. Cash flow has always been a little bit less, except for the last year, so I lightened it a little bit. Now, when it comes to PE, I mean, when Netflix is almost becoming, it's almost like styrofoam or Kleenex. It's the actual product that is just, hey, what are we going to watch on Netflix? Meaning, what are you going to stream? What streaming service are you going to use? It's like when you go down south and you say, I'll have a Coke, and they say, what kind of Coke? And you tell them you want a Sprite or something like that. That's just what Netflix has become. It's the number one go-to service for streaming. So I actually am going to give them a little bit higher. I'm going to go 17, 20, 23, 17, 20, 23 for the PE and the price to free cash flow. And my return, I'm going to leave at 10%. I'm going to leave it at the market and just see what comes out of here. So on the low end, about $110 to $135, $429 to $460 on the high end, $225 to $255 in the middle. Current price is about $600 a share. It's a little bit rich for me. I'll probably add it to my watch list around $400. I just think that the fundamentals are getting better with this company, but I want the fundamentals in my stock price to kind of meet, and then I make my execution. Hopefully you guys like this one. And if you do, watch this next video.